First section I just want to start on is obviously executing on our strategy. I think we've had that clear strategy now for for the year or so that I've been on board, and probably the year before that. So the execution around what we call the three pillars of the business: owning that performance technology stack, leveraging that authentic connection we've got into prosumer, and then commercialising the live in-game data that we've got. And as you can see from the first slide up there, we've made some really good progress. We acquired the AMS business, which was the missing component in the performance technology stack, just over a year ago now. Integration of that's gone really well, and we're getting some good momentum and some new customers. I'll talk about that a little bit later on. As we expect to see more and more, we're Baylor University in the US. We sold our sort of first full stack customer, which was terrific given there is some integration today. But there's plenty more coming down the path, so that was good to get that first one away. The internationalisation of our video offering, Catapult Vision, we launched that a little bit ahead of schedule, and we had a good number of customers that came on board in just right towards the end of Q4, and we expect to see some good momentum for that product into the global market outside of North America, as well as pushing it through North America where the Exos product may not be suitable, and also just that continued market leadership, and I'll talk about that momentum that we've got. So some really good progress on sort of pillar one of our strategy. Pillar two we've been talking about with prosumer. Great to get the player product out there. A little bit later than what I'd hoped for. We launched on the 6th of June. I was hoping to get it a little bit earlier into Q4, but we've launched that for soccer, and I'll talk about that a little bit later on. And then the commercialisation of live in-game data. It's our third pillar. It's probably the smaller of the three opportunities at this stage, but some good progress with a number of the leagues here in Australia, and I'll touch on that a little bit later too. Highlights for FY18, and there were many, but I think the way that you'll hear us talk about the business, and I think the narrative that we have around these three components of really strong results in year, and we expect that to continue. Breaking out that profitable core, just to show you with the elite business, the strength of that profitable core and the expectations we have for future growth, and then that investment in innovation. And innovation and ambition are at the core of what we do at Catapult, and we're continuing to invest there, be it in the prosumer offering, be it into some of the more nascent technology areas around tactical analytics, which I'll talk to. But I think the results hopefully speak for themselves there. We were pleased to actually hit the number for the year that we put out in November of last year, particularly given the delay that we had with the launch of prosumer. So revenue up 19%. Really importantly, ARR up to nearly 54 mil, up 16%, really driven by elite wearables at nearly 30% growth in ARR, and that will continue to be a focus for us. It may ebb and flow, and I'm sure you'll have a few questions around that in terms of the subs and cap mix, but that remains an absolute focus for us. Importantly, the first year of positive operating cash flow, so we're starting to see some of that scale come in. We're getting better with where we're spending our money and how we're collecting it and the volume. So it was good to see that one ticked off, and also just that momentum in H2. I think, rightly so, there was some concerns after H1. We've got a lot of the cost base under much more control than it was 12 months ago. We've seen some good momentum in that second half, and we expect that to continue into FY19. Profitable core, worthwhile just touching on there, and Mark I think has done a really good job breaking that out for us within the business and giving that clarity. And you can see there in terms of underlying EBITDA of 8 mil, free cash flow of 2.8, ARPU stable and churn decreasing, and we'll touch on that a little bit later on too. And just starting to see some of the leverage coming from what we're doing in that elite space, as we're up over 1,800 customers. We're in 82 different countries, added 11 new countries in the year, and over 30 plus sports. So that standalone elite business, and we always knew it was, given the work we did on the addressable market we've shared with you, the customer economics work that we've done with the LTV to CAC ratio. We're continuing to push hard in there, and we think that's a terrific standalone business. And then that investment in innovation, about $9 million invested in R&D. Really pleased to have launched the player product, as I said earlier. in June, and we have high hopes for for that 20 million plus soccer players we're going after initially. And some of the other launches there around Catapult Vision I spoke about, continuing to invest in tactical analytics, that bringing together of video and the wearables data, and just an example there of some of the momentum we got without launching Player and the demand there for prosumer. So really important for us, strong results, profitable core, and we're investing in innovation and growth opportunities globally. Just quickly to double click on those three components that I'll open up to Q&A. But the core business, as I said, Elite Wearables growing at 29%, Elite Video at 6%, adjusted for exchange rate. It was up around the 8 or 9%, and importantly, we saw that growth in the second half in the video business. There were some good concerns at the first half, but we saw that really kick into H2. 200 new clients signed in FY18. AMS we launched, as I said, we only acquired it 12 months ago, but we've got 20 new clients on board. The integration's gone really well. We've got the key people. We've rebranded it. We've already got integration of our wearables into that AMS, and likewise with the Catapult Vision, the new video product. So we're excited about some of the opportunities there. And in fact, we signed our first league-wide deal for AMS with the Women's Tennis Association. So that's a nice benefit from having that product, but we expect that to be really important for us into 19 and beyond. Some good league-wide deals signed. You can see them there down the bottom. The Rugby Football League in the UK, Scottish Rugby, AFLW as that continues to grow, Women's Tennis Association, and the Confederation of African Football. And we had good representation through that with in the World Cup in Russia. As I said, 82 countries, 11 new ones during the year. That cross-sell ability starting to come in, and expect to see us talk about that more in terms of customers with multi-products and us being able to go out to market in a genuine way with that performance technology stack now. And the install base of subs on the wearable side up 27% to over 17,000 devices. And also prosumer, we sold 14,000 devices, and that predominantly was Player Tech. But once again, that gives us I think a good feel for what we can potentially do with the Player product that we've launched. And given we think that's a better proposition and really targeted at that soccer market, that we should be able to do a better job there. Just some of the wins that we've had. I won't dwell on this, but the logos are important for us in terms of the wins that we've had, be that across even some of the universities that are really getting engaged with us too, as well as the elite sporting teams, 35 sports, 82 countries, and over 1,800 clients and clear leadership. The profitable core, just to spend a little bit of time on the 4 slides here. I touched on the core EBITDA growth of 38%, just over 8 million for FY18. ARPU stable at $109, and that excludes the AMS clients that we've got. So on the wearable side, there's a good base for us to work off there. Subs, as I said, that continues. ARR continues to be a key focus for us. So just under 17,100 subs units out there in the wearable space, and strong growth in ARR. Wearables up 29%, and our video up 5%. So we expect to see that to continue to grow as we continue to focus on the subs mix there. Last couple of slides just on innovation continues. As I said, that's at the core of what we do. We've created categories before. We've acquired businesses that are enabling us to deliver, as no one else is, that performance technology stack to elite teams. And enhancing that core is also really important for us, and that focus on the data that we have and the new analytics modules we bought to market, 25 new ones. Across, I think it was 6 or 7 sporting codes, and deployed to 250 teams. And that's really important for us in terms of opening a conversation with some codes that we need to really get into. But it's also really important from a retention perspective for teams that we have, that we're continuing to add value with analytics metrics that are relevant for them. Catapult Vision, as we said, we've been investing there to internationalise Exos, to be able to take a video offering outside of North America to the rest of the world. and we're on that runway at the moment. We've launched that product. We've had some really good interest. We've got a lot of trials out. We've signed up customers, and we hope that with the momentum we get there, that really pushes the video revenue to double-digit growth. So that's going to be really important for us in the next year and beyond. And also that investment in tactical analytics. We should have products out for that in the second half of FY19, but that's the investment that we're making with the team we've spun up in Boston, that's utilising the video capability we've got, the wearables data that we have to provide unique insights for coaches in particular. So I expect to see some more news from us in FY19 to make sure that we're getting that investment and we're getting the investment right and the products coming through that we can monetize. Prosumer, I think I've touched on, but really important for us, a massive opportunity there. You know, we're going after soccer first. It's the world game. There's 20 million registered soccer players there. We've launched it in the UK, through Europe, into the US now, and into Australia. We're pleased with the progress that we're making there. It's still early days in terms of building that awareness, getting the channel capacity right. But all the building blocks that we spoke about that we've been putting in place through the acquisition of Playertech are positioning us really well as the team and the manufacturing capability we have in Taiwan. So we really expect that to ramp in FY19. Catapult Vision, just one slide there. I won't dwell on it. I think I've spoken to it already, but really important that we've sat down with a lot of the coaches to understand where the video products aren't working for them today, and what other problems can we solve, and then really importantly that integration piece with our wearables data. And once again, expect us to push out more news on our progress with Catapult Vision, and then just obviously the successful player launch that we had on the 6th of June in London. We also did a PR launch here last week in Australia. So the guys are really starting to ramp up the marketing activity. We raised the capital back in March, saying that we were allocating a chunk of that to really push forward with the launch of Player, and that's underway. Be it what we did at the Gothia World Cup, a massive event in Sweden that targets our sweet spot really importantly, together with a lot of the activity we're doing online with channel partners and creating content and awareness via social channels. So expect to see us ramp that up as we take that to market more aggressively. So I'll stop there in terms of the obviously the focus there on the execution from a strategy perspective, the progress we're making there, how we're thinking about the business in terms of big focus on strong performance in year, really building out that profitable elite core business that we have today, that will only continue, and then that investment in innovation, and we'll continue to do that. We did it last year with a $9 million R&D spend, and we expect to continue to invest in the right areas there.